Well, everyone, a few minutes with Peter Grandich. I always remind you, please don't treat this as investment advice. Always speak to a licensed financial advisor before making any investment decision and read all disclosures on my social media. Well, the tide has turned here in the sense that I am the interviewer instead of the interviewee for a change. And I'm glad to do that with Steve. All you can be, all you need to be in. I like to call him Barton. Steve, welcome.
Thank you, Peter. Thank you for having me back on the show.
Well, you're kind enough to interview me multiple times. The least I can let you do is share your views instead of always having to hear mine. So this is all about you and your views. And before we get going, tell us a little bit about yourself. Just remind us who you are and what you do.
Okay, yeah, I come from a long line of gambling and placing wagers, whether that's sports, stocks, or poker. And in the COVID crash, before that, I was in the Ray Dalio kind of set it, forget it, all weather portfolio. 40% long-term bonds, 15% intermediate bonds, 30% S&P 500, 7.5% commodities, 7.5% gold. And then when COVID started to hit, and I saw on the news that they were closing the stock market after it had been open for an hour, because everything was crashing, I went all to cash, and I really rethought that strategy. And then I moved away from poker and other forms of gambling and moved on to the stock market. And I realized that 15% allocation, 7.5 to gold and 7.5 to commodities, was probably going to do far better than the rest of it. And so the first initial bet was my buddy Daniel called me up, my trading partner. We've been doing options together for years. And he said, "Hey, I found it." And I said, "What'd you find?" And he said, "Oil is negative $30 a barrel." And I thought, well, how is that possible? So that was our first bet, probably the best bet of my life. And after that, then I found the gold sector, precious metals, found uranium a couple of years ago, and just been all in since. I don't think I own anything other than some long time Coca-Cola shares that just pay every 3 months. Yeah, full blown into commodities. I think we are entering a commodity super cycle, and I'm really excited for this next leg.
Well, that's why I call you. My nickname is All In Barton. But you're kind of like me. Although I've worked and do planning and all, I'm a gambler slash speculator. And I've always tell people, Steve, that the word speculation came up by Wall Street, said they don't say gambling, but gambling and speculating is really the same thing. You've really got to be prepared mentally and financially to lose part of all your capital. And if you are, then go ahead and do it. That's real important. Okay, so what kind of a general overlook would you say now? You're talking about commodities. I want to get to some Pacific in a minute, but what kind of macro outlooks? I have a very dire outlook for 3 to 5 years from now. What's kind of your outlook, for yourself and the people that, you write for? And you also get to speak to a lot of great people, and I'm sure you're picking up things in that way as well.
Yeah, I would say generally speaking, if we look at like just credit card debt alone, if you believe the Fed numbers, people are actually spending more now than they're saving. In other words, they're putting more and more on a credit card. And I understand some of that is due to inflation, so the number is going to be higher because there's more dollars in existence now. But it is not a great outlook, I think, for the average American, and especially the people that are just kind of passively dollar cost averaging into the market. Most of them are doing it in the S&P 500, which is only going into like 5 stocks, or the majority of it. I think they have absolutely no idea what's coming, and I see another great financial crisis like we had in 2008. And I think when I talk to general people on the street, I'm very curious about this, and I like to talk to financial markets. And when you just talk to waiters and waitresses, they don't know what's up with the economy, but they know that something's not right about it, And I think that we're going to be, over the next decade or so, just hitting a lot more inflation. Although it has come down, we peaked at the CPI around 9% or so, and now we're down around 3%. I think this is going to be kind of a cycle that's going to continue to move up in the long term over the next decade or so. And, commodities and, precious metals specifically are one way that you can really protect yourself against that. So that's kind of my macro outlook. I think that generally speaking, the market is going to get hit. People are going to get laid off. We're going to go into a recession in this year, if not early 2025. And, we need to position our portfolios for that, or we're really going to take a hit.
I'll tell you something real quick. I didn't share this with anybody. It just happened a couple of weeks ago. I was out with a at one time, very wealthy person, but they got themselves into trouble with a lot of leverage and a lot of different things. And even though they appeared to be wealthy, if they had to liquidate now, they probably would end up with very, very little. So he was sitting in the restaurant, and the girl came over, and he's a handsome man, and he's divorced, and they're talking. He's got big jewelry on and everything. And she says something to the effect, she says, "You must be really enjoying your wealth." For whatever reason was led that to her. And then when she walked away, he said she should only know that I was watching her how she was doing her work because I may have to become a waiter soon. And what I got out of that is a lot of perception of people that they think people are doing well. Like when you said people just know there's something not right. Not a lot of people are, Steve. They're not a lot. I can just tell you from our planning group, I still say it's 7 out of 10 families that come in are living at least one lifestyle or more above where their finances supported. And you see it in the numbers every month. The consumer spending's twice the amount of what personal income is. And no one says, well, how are they doing that? Well, you're borrowing. That's the only way you could be doing it. Listen,
Yep.
I want to hear about you. This isn't about Peter Grandich today. So let's start looking at, I know you still remain a rather bullish on uranium. So let's tackle that first, your views there.
Okay, yeah, this is good timing because I just interviewed Justin Hune of the Uranium Insider on the show. That comes out tomorrow on our channel. I'm going to share my screen here and we will pull up uranium. Okay, so let me get rid of the Fed funds futures there. There we go. All right, so this is the spot price of uranium. This is going back to 2008. And Fukushima happened, it cratered. And then now we've had one heck of a run here. This is about where we were on your show right here when it was sitting around 55 bucks a pound. And now we're north of 100. We believe that this is kind of the new floor. So this is the starting point, essentially, we think, is around $100 uranium. We think there's definitely going to be another leg higher as soon as more utilities realize that it's not going back down to $70 a pound, and they're just going to have to buckle up and pay for it. The easiest way to play that is kind of like, when you first find out about gold or silver, you buy the coins and the bars. The easiest and most beta way to play this is to simply buy into the Sprott Physical Uranium Trust. And basically, this is just a warehouse full of drums of yellow cake. So you buy the commodity itself. So we're just purchasing down here when everyone hated it, nobody cared. And we've been exiting some of our position on the way up. We're past the point of concern on this one. We've gotten back our initial investment, paid the taxes, and we're hanging on for the rest of the ride, however long that'll go. A lot of that'll be dictated by interviews from our experts of when the best time to exit. Another beta way that you could play it is URNM, same kind of thing here. Buy the commodity when it's unloved and nobody cares, and sell it when everyone does care. Another awesome one has been Uranium Energy Corporation. We even drew a little happy face on here for it. Just had an incredible run, and we thought that this one was going to have a little bit of a premium on it because, with the Russian ban going on of uranium, that's going to get passed. And this company's operating out of America. We think there's probably just going to be a premium on American uranium as opposed to otherwise. Uranium from Russia, especially if it gets sanctioned. So anyhow, we like this one a lot. I don't see any entry points right now, but we think this one will do really well.
So let me ask you, what do you feel about, and how does the sentiment play a role in your investment decisions? because as you noted where these things were before, and Steve, as you know, and again, this is not I'm right, you're wrong, or whatever kind of a discussion. I've exited my uranium holdings. One of the concerns I had is sentiment went from you couldn't find a bull to everybody's launching rocket ships on the internet about uranium. So how much does sentiment play a role in your decision making?
Quite a bit. That's why we started selling. I would explain this, the baseline fundamentals and thesis to friends and family, and nobody cared. No one cared, and it's like, okay, we're consuming 185 million pounds a year, and we're only pulling 150 million pounds out of the ground. That's got to come from somewhere. And the only way that you're going to make up that 30 or 35 million pound deficit is to have some of these juniors come online and start producing. And until that happens, until the price gets up to $80, which, incentivizes them to do that. So sentiment plays quite a big role. That's kind of why we're on the house's money now.
So let's go to the other coin, because in my 40 years, there's never been a divergence between the price of metals and mining shares, particularly as you go down the food chain into the junior resource market. Their sentiment was just dire. There was
Yeah.
a little pickup as we went into the end year thinking, 2023 is over. Here's 2024. And then after a few days, down goes Fraser again. So sentiment there is still awfully weak. But let's talk about the metal itself first. What's your opinion on gold?
Okay, we are extremely excited about gold, and I'm going to share my screen here again, and we will pull up our favorite metal. Okay, so this is the gold chart. Let me go here to the monthly, and I'm going to bring in the Fed funds rate. And what this will do is I'll explain it here. So I tried to find a pattern back here with the Fed funds rate and gold. And I think because gold was pegged at 35 bucks an ounce forever, I couldn't find a discernible pattern until we got back to the dot-com bubble. So this rate here is the Fed funds rate, this orange line. And then these bars in the background is the USD price of gold. And if we look at this hiking cycle right back here in 99, the Fed was hiking. You can see the interest rate over here on the left. They got up to 6.5%, and then the dot-com bubble hit, and they started cutting rates, right? Well, if we look at the performance of gold, if we line up when they started cutting right there to the price of gold, initially gold went down just a little bit, but by the end of the hiking cycle and when they paused at the bottom, it went up about 50%. Now we go to the next hiking cycle right here, leading up to the great financial crisis where they leveled off. And if we take where they start cutting rates to where they end, it lines up right about here and has a run up of over 50% again. Now, what happened here, usually when the Fed is cutting rates, it's not because we're having a great time as an economy. So I think that's some of the initial selling that you see right here in gold, and also that we saw back here. Anything that has a bid gets sold, and including the metal itself. But right back here in November of 2008, we had QE, quantitative easing, basically just, to heck with quality, we're going to produce quantity. And gold had a massive run of over 170%. Okay, so that's the second hiking cycle. Now here's the third one. Starting out at free money for the last 5 years and decide, okay, well, maybe we should have some kind of interest rate going. Hiking cycle, gold just kind of chops sideways. And then as soon as they start cutting rates again, we move from here to here, over 60%. This is where we are now. The Fed started from essentially zero, did their fastest hiking cycle ever, and now we've been paused here for a few months. I think this pattern's gonna repeat. I think that when the Fed starts cutting, which the Vegas odds have them doing in June, July, and I think that we're going to have a repeat like we have here before, there may be an initial sell-off. And in our opinion, that's another buying opportunity. But I think there's going to be quite a massive move here. If I become geeky in my technical analysis, we have here what is called a cup and handle pattern. And these patterns usually form out to the upside. It looks like this. See, that's the cup, and then that's the handle right there. And typically, the way we can measure these is you take the bottom part of the cup to the top part, and we got a move of about $1,000. If we're sitting at 2,000 now, by the time this cup irons out, it should be up around 3,000 or so. So we think that there's going to be a real move here in gold, not just because of the technicals, but because of the fundamentals that we were talking about before. And a leveraged way that you could play that is you can buy into some of these miners. So an easy way to do that, first after establishing your physical position, you can also establish a physical position here on a fund like PHYS or OUNZ, essentially a warehouse full of pallets of bars of gold. And you can buy into the physical here, making it very liquid and easy to sell and easy to buy. You could do it in PSLV. But the ones we're excited about here are GDX. Now, if we look back over time, this is the last bull run from what we just did on gold. It moved 170%. Take a look at what this ETF of miners did. See, it's up over 300% from the move from 2008 to 2011. And we think there's going to be a repeat of that. So this is essentially doing almost double what the metal itself is doing by leveraging it on these miners. You could do GDXJ as well. Look at, this is the move that we're kind of expecting. Buy on this end of the chart and sell on this end of the chart, just like we did with uranium. We think that 2024 is probably going to be the year for gold. Some other ones you could play would be Newmont. These arrows are a little deceiving. This is 90% of the bet down here. But we think that there's going to be a big run up, and your top three, as far as we see, are going to be Newmont, Barrick, and Agnico Eagle. Agnico Eagle has a little less debt, so I might like that one a little bit more. But I think any one of these is just going to be fantastic, and we can see here, here's Agnico Eagle. This is the 2008 one that we showed in gold. This one over 300% as well.
So I was wondering if you can just put your gold chart back up again, the one that you
Sure.
had up, Steve. You can leave it that way. One of the things that I have stated, and you showed also how much interest rate rose in the last 12 or so months, yet gold didn't go down like it did before, which I thought was a hidden strength for the physical bullion. I love the gold cup and handles, one of the main reasons that kept me long and strong technically. But I don't know how anybody can look at the long term of gold, even if you go back to the year 2000, when we're down under $300.
Mm-hmm.
It's actually outperformed the Dow and the S&P since then.
Wow. Yeah, I haven't overlaid that chart.
Yeah. And so, but one thing that I've learned that I just want to add, and just because I say it doesn't mean it's fact, but for 25 years, I was on the gold speaking tour all over the world. A lot of the same people. You still interview some of the old guys that are still hanging around, so to speak. We all used to say this, and I don't think we can say it anymore after the last 12 to 18 months. We used to say owning mining shares was like owning gold. The last 12 to 18 months proved that wrong because the gold has gone up. You showed Newmont. Newmont went from $88 to 32 in less than 2 years. And it went back to a level price recently when gold was at $1,300.
Yeah.
And Newmont is far stronger and better than the typical junior. So the mining shares have lived a completely different life. And as I said, you went into the juniors more. And a lot of people have made the assumption, and I'm betting they're wrong. Curious to hear what you have to say is that just means that they know something that gold doesn't, and gold's going to come back down a lot. I just think it's the opposite. People have overdone and overly concerned about the mining shares, and therefore gold's going to bring them back up, especially when it gets above 2,100. That's where all the momentum people will come in and all. But I'm curious, do you look at any of the small juniors, or do you just focus on major producers?
Yeah, I do have a couple of juniors that I'm looking at. One is a project down in Chile. I've been following it for maybe 3 years now, run by Alex Black. I'm not sure if you know him or not. They have a massive deposit. I mean, it's like 8 million ounces. I mean, it's just huge. I'm sorry, not 8 million ounces. It's just shy of five. They're, I believe, the eighth largest deposit in the world. It's just some political risk, you know. I mean, there's never a perfect story with these juniors, and they got tied up with the government and anyways, without going into the details, it was it was kind of sad. They were ready to start developing and building the mine, and it should be almost done right now. But since it got put on hiatus for 18 months, now they got to raise cash again. But yeah, man, that one got hit. That was a bummer. But yeah, I do follow some of the juniors, but most of what we do, I think if your average everyday person just plays the beta in this sector, I mean, you saw the move in 2008, that was 300%. I think most of these majors and just buying the GDX or GDXJ, if you want to get a little more risky, you probably got an easy double, you know, maybe 50% in the next year or so. You know, I'm looking at this as a 3 to 5 year bet, just like I looked at uranium. It takes a while for these things to get filtered out. People are eventually going to realize that the answer isn't NVIDIA, it's oil. You know, people will wake up to it. I'm seeing the same sentiment right now about gold and silver that I saw 2 years ago with uranium. And if that's not a bullish case for it as a contrarian, I don't know what is.
Yeah, I concur with you. The one thing about the juniors that changed is where you're located now is very critical. 30 years ago, it wasn't something we took too much into consideration, but because of economic, social, and politics, we've seen a lot of that and people grown concerned. For me, I just focus on North America because I'm too old. You're still young and you can stay up nights worried about this. I can't. Oh, but listen, before I let you go, you mentioned something that I think is going off the radar again because the Russia thing is not, it's still happening, but it's not on everybody. I don't think people recognize how dangerous the Middle East has become, the tinderbox that it is in many ways. But people aren't talking about oil. They're like, yeah. So I know you follow it. What's your view on it, Steve, at this point?
Man, I like oil a lot. I mean, when you look at some of these companies, they are just printing dividends. They're just, you know, taking a bath in cash, and they're rewarding shareholders with buybacks and with dividends, and nobody's talking about it. You know, that's one of our first clues right there. Is it hated? Yes, it's hated. Everyone wants to drive an electric vehicle, but then they realize that they can't go more than 150 miles without charging it, and it doesn't work when it's freezing. I think that we're going to continue to have hybrid vehicles and ICE engines for a long time. I think the answer is hybrids. I don't think the answer is electric vehicles. And if you believe that you're going to go out to your car tomorrow morning and it will start because we still have gasoline, I think it's a pretty good bet. You know, maybe that's one of the reasons that we haven't gone into a recession as quickly as I thought, because natural gas and oil are so cheap. But I think that trend is going to reverse. Here, I'll share my chart here, and we can just look up crude oil futures. And where are we? There we are. You know, we had this pretty big spike right here. So this was the negative $30 a barrel that the best trade of our life. We sold about half of that when we got up to like the 110 range. And now we've been entering the market again. So if we look here at crude oil futures, it's hitting along the 200 monthly, right? That's good. Hitting along the 200 weekly, that's good. and then if we go into the daily here, we've had some nice buying opportunities right down here in the last, I don't know, 6 or 8 months or so. And so basically we're just accumulating here. And the way we're accumulating is in the best oil company on the planet, Exxon, great dividends, and just accumulating on pullbacks here. We fully expect, I mean, I really think we're one missile strike away from this thing bouncing $20 overnight. There is so much turmoil over in the Middle East. Nobody's talking about it in relation to oil. And, you know, we're one hiccup away from not using the Suez Canal. And I think this thing is going to skyrocket. You know, I don't know how you would time that the day before. I think you basically just have to accumulate, get paid dividends and rent along the way, and ride it when it comes. Another way you could play this that we like this one a lot is Blackstone Minerals. They let me show you their dividends here. I mean, it's pretty incredible. Okay, so this is going back to 2017, 6.6, 8.6, 11.6%, 10%, 7%, 9%, and 11.9% for 2023. It could go sideways and you make money. And we just made another purchase down here, a limit order hit for $15. We have so much of it, we probably shouldn't buy anymore. We should probably be a little more leveraged, maybe to Occidental or something. But yeah, those two I like a lot. I think oil is going to do well. And like you said, when you look at the macro picture and what's going on in the Middle East, I don't think it's priced into it, and I think it's a deal.
There's one thing that's changing. I haven't talked to anybody about this yet, haven't really said it publicly, so we'll close with me discussing it with you because I value your opinion. I think one of the changing stories for 2024 from 2023 was a year ago, the markets and people were focused on, wow, the whole world's electrifying, all these things are going to do this, that, and the other. I don't know if that's the case anymore. And one of the ways that I've seen it is we're seeing studies now, people still here in America don't want to buy electrical vehicles a lot. They like the hybrid opportunity, use electrical when I can, but always count on gas and not run into the problems and so forth. The costs, the runnings of electrical, and then just the ignoring a fossil fuel that was viewed 12 or 18 months ago is losing its vogue. It's people are starting to second guess all of that. And the way I knew it was Hyundai, who has a division called Genesis, and I love the Genesis cars. That's how I learned about it, Steve. I read everything about the Genesis. I have them, and they were all ready to switch next year to entire electrical. Every car manufactured anywhere in the world was only going to be electrical. And they just announced they're not doing that. And the only reason they could possibly announce it is that they've seen the handwriting on the wall, that the world itself, these governments and certain people and groups might say it, but the regular people that still make up most of the world are not ready for this all-consuming, all electrification world. And I think that's not yet being discussed in the markets. Curious what you think about that.
I think you're right. I think that if we're going to move towards I'm doing air quotes, a green planet, that we had Doomberg on the show, and he thought the solution was hybrids. And the more I think about it and talk to people, the more I think he's right. My brother took he works for a major auto manufacturer, and as part of a goodwill thing, they went to a electric vehicle conference. They had to drive one of their electric vehicles, the 4 team members, 600 miles to this thing, and it took them over double the time that it would have in an ICE vehicle, because they had to stop every 150 miles and charge the thing for an hour. I don't think that's very sustainable. I don't think people want that. I don't think they care about the environment enough to double their trips like that. And I think hybrids are the answer, because you can do, 90% of most people's driving is within 10 miles of their home. That's great for when you get home, you just plug the thing in. But now when you want to drive to Vegas and it's a 6-hour drive, you got a problem. I think that's the answer. I don't think electric vehicles are going to be quite what they thought it would. And yeah, I completely agree.
Yeah, I think
Unfortunately, that's not great for some of our battery metals bets, but I guess you got to be hedged some way.
yeah, I still think the copper is a story because there's just a deficit of it, period. There's not an overload of it. But certain things, and I think the other thing, Steve, too many people got caught up in wind and solar and those type of things, thrown all sorts of money was thrown at. A lot of them are closing, collapsing. We have all sorts of problems here with the windmills that they put out in the ocean. I don't know how it is in California. I don't know if did they put the windmills for power off the coasts of California?
Man, I have not researched that. I've never seen them out here.
Yeah, well,
I didn't even
did
know
that
that was a thing on the East
in
Coast.
New Jersey, and they now shut 2 of the 3, and I don't know how much they spent doing them and so forth and so on. But yeah, it's a change. Hey, listen, thanks for flipping the roles here. It's comfortable not to feel that I have to come up with something good to say. You had to this time. And, you do good work. You're a nice young man, and continue the great work. And know that I'm most grateful that when you have me on, Steve.
Yes, well, thank you, Peter. You got us into copper, and I'm really excited for that one too. I think it's going to be a little bit later than gold, but I think that is going to be a home run in the next, I don't know, 3 years, something like that. Maybe it'll take as long as five. I don't think so, but yeah, yeah. And thank you, Peter.
You're always welcome, Steve, and we'll get caught up again. We'll keep doing each other, and I think it was a further discussion, and maybe next time we'll just have just discussion. We'll just keep throwing things back at each other because you have a good sensible mind. And can I also make one point? I think the public needs to know that there's no ego in your work. I watch your interviews. I like to say that most people in my business were opera singers, and everybody go, "What the heck do you mean by that?" Well, when an opera singer warms up, they go, me, 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 me. I watch a lot of people interviewed and it's me, 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 me. And there's no me, me in you. And that's a very good asset, Steve. It's going to do you well. Stay humble, stay honest, and I'm certain it will work out for you.
Well, thank you very much, Peter. I appreciate that. Yeah, if you could do me a favor and just put a link to our YouTube channel in
Oh
the
yeah,
show notes.
I'll be putting all that. I'll send it to you as well to put it out as well. And I hope anybody that's watching this from my end, make sure that you start following you on YouTube and also on Twitter because you do fair good work on Twitter.
Thank you. Thank you.